I think we hit six figures. I do these 10 surprises every year, and one of mine was, that we hit six figures. We definitely take out the all-time high.
Mhm.
That could happen in days, right?
Sure.
Once people realize that these ETFs are taking out more Bitcoin out of the market than is mined every day, and after the halving, it's going to be two or three times
Mhm.
that. So it's just a supply demand problem. So we had the demand shock.
Mark Yusko, CEO and CIO at Morgan Creek Capital Management, connects the potential Bitcoin surge to ETFs withdrawing more than daily mining output. He foresees a potential doubling or tripling of this withdrawal rate post-halving, leading to a significant supply-demand imbalance. Bitcoin has seen a resurgence above the $41,000 level following a period of instability. On the back of industry outflows, Bitcoin dipped below the $40,000 threshold on several occasions. Investors are expecting a pre-halving rally before April. Historical data typically signals a bullish period for the king coin during this period. In an interview with CNBC, Michael Saylor said that he expects Bitcoin to reach $350,000 by the end of 2024, based on his analysis of the supply and demand dynamics of the market. Yusko anticipates surpassing the all-time high, suggesting that this could occur rapidly, possibly within days. In the last century, the U.S. federal debt has risen from an inflation-adjusted $403 billion in 1923 to $33.17 trillion in 2023. According to recent data, the U.S. public debt surged during the pandemic and recently passed $34 trillion, a record even when accounting for inflation. Yusko advocates allocating a portion of wealth to Bitcoin, considering it a rational and logical move in the current economic landscape. Declining national fiat currencies and a generally unstable economy have helped propel Bitcoin to all-time high prices in Turkey and Nigeria, despite the asset trading 50% below its peak in the US dollar terms. Yusko underscores the significance of Bitcoin as a hedge against the devaluation of currency, especially in the face of increasing national debt. Let's delve into the few clips from the interview. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
I think it was a tremendous launch, tremendous day for digital assets broadly. There's all the maxis are upset because, these people don't own Bitcoin. You're right. Technically, you're right. The Bitcoin was created so you and I or anyone else could exchange value without an intermediary. So no, these people are not going to hold their keys and they're not going to put it in cold storage. But here's the thing. There's going to be a transition from TradFi, traditional finance with trusted third parties, to ultimately DeFi or no-fi, right? Where there's no trusted third parties. This is going to take time, but this is a great stepping stone for people to add what has been, the best performing asset over the last decade. It's actually been the best performing asset 12 of the 15 years it's been in existence. Most people have zero exposure.
Mhm.
Not people listen to the podcast, but most people have zero. And, I've been talking about this since 2017, 18, right? Get off zero. Zero is the wrong number. Now, I'm not saying 100% or 90% or 80%, but zero is just wrong.
Yeah.
And you want to have some of this asset in your portfolio for lots of different reasons. For the low correlation to other assets, it protects your portfolio, for the fact that it is a store of value against devaluation of the currency. That was the big one for me. When Larry Fink, right, who's the head of the largest asset manager on the planet, BlackRock, who 6 years ago said this was an index of money laundering.
Yeah.
Bitcoin was an index of money laundering. For him to then come on CNBC and say, no, it's a store of value that you should own to protect yourself against the devaluation of the currency.
Mm.
And I just read a stat right before I came on with you. Crazy. So we've added $1 trillion of debt to the national debt in the last 3 months. Now, just again, to put that in perspective, you and I would have to sit here together for 31,710 years and spend $1 every second. That's 1 trillion. So it took 199 years to get the first trillion of debt in this republic, and the last trillion came in 3 months. So what does that mean for the purchasing power of our fiat, the money that we're paid for our work and our service and our lives? Well, it's going down. Yeah. And I don't have to tell anybody who has gone out to lunch lately or bought a coffee lately or tried to buy a house lately, the value of the money is going down. It's being devalued by the creation of this, what I call the fiat fiasco. And so having a portion of your wealth in this asset that is the antithesis of an inflationary fiat currency, it's a deflationary store of value. It's just a logical, rational thing to do.
Despite Bitcoin's entry into the U.S. stock market, Ether prices outperformed the world's largest cryptocurrency as investors speculated that an Ether-based spot ETF would be the following financial product to come to market. Grayscale and BlackRock are companies trying to bring spot Ether ETFs to market. On January 25th, the U.S. Securities and Exchange Commission delayed an application by Grayscale Investments to convert its Ethereum trust product into an exchange-traded fund. 1 day earlier, the agency did the same regarding BlackRock's application for a similar vehicle. The delays were not surprising, according to experts who expect the SEC to put off a decision on the ETFs until later this year. According to Bloomberg intelligence analyst James Seifert, spot Ether ETFs have roughly a 60% chance of being approved in May. Mark Yusko throws us a curveball. When questioned about the approval of an Ethereum ETF, he expects a delay in the eagerly awaited launch of a spot Ethereum ETF. Now let's redirect our attention to a video.
If it just went on the fact pattern, I'd say 0 chance anytime soon, because even though Gary's waffled on this, he basically said the only reason I approved the Bitcoin is because the courts forced me.
Sure.
So unless Consensus or somebody else like that sues the SEC, I mean, BlackRock's an opportunist. BlackRock is all about the money. They're very smart. And if they saw the writing on the wall that the SEC would be forced to approve, they would certainly do one. But I just think right now, there's no impetus to force them to approve. And remember, the way the SEC board is made up right now, there's 5 members, only 1 is really logical, Hester. I mean, she's amazing. The other 3 are totally politicos, and Gary's Gary. So now I will give one of the 3 politicos did vote yes. So I will give them some credit. That shocked me.
Matthew ADA, right?
Yeah. So that did shock me, but I thank them. But the other 2, but we're likely to get a change in the Oval Office this year. I mean, not for sure, but pretty likely. And then they could clean house in the SEC and change the balance of power. And then, so I'd say 2025 is probably a better shot.
While Bitcoin's value is on the path to recovery, the sell-off from Grayscale's Bitcoin Trust also shows a downtrend. On Friday, day 11, the GBTC outflows came to $255.1 million, taking the cumulative outflows for the fund to around $5 billion. What is your stance? Will the outflows from Grayscale end soon? Your input is valuable. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.